And good morning, traders. You have just me. That's it. Peter's out, and so you're stuck with me and my rants. So I see there's already some questions here, but why not just get started with the rants right off the bat? And here's my first one. All right. So I don't like to get into world events or unless they kind of affect the market. But there's no denying that right now, globally, things are at a fairly tense moment. Um, what is confusing to me is VIX. So VIX is at 18.8. It's up a little from its lows, but it's still pretty low. And you you have missiles flying in the Middle East. You have war. You have an election coming up. You have a tremendous amount of uncertainty. You have earning season approaching again. God, it feels like it just passed. And yet the market is sleepwalking. It's odd. Now, usually when there's something odd going on, it's due to low volume, right? And as we see here, we have SPY here. Um, the volume on SPY hasn't been low, actually. It's been average. It's been an average volume here. You got some spikes and all that, but overall, the daily average, if you want to go to the daily here, I mean, look at this. The daily average on SPY is pretty damn good. So now you have SPY in this compression. It's on a buy signal. It's been on a buy signal. I've always said, the market is bullish until it's not, right? Basically, what I mean by that is right now, my outlook is actually more bearish than it's been. But the market is bullish until it isn't. And right now, the market is just staying in this sort of compressed zone. It is nowhere near the SMAs. So, you put the SMAs on here, and you have a pretty long way to go before you even encounter the first SMA at 552, right? So that's $17.50 off the current. That would be a huge drop. Um, what is holding this market up is the question, right? And what seems to be is sometimes, normally when you have low volume, right, then what's holding the market up is the absence of sellers. You have some buyers in there, you have a few sellers, but you have this absence of activity, and institutions are sort of laying dormant. But in a case like this, when you have above average volume, what's happening is you have an equal number of buyers and sellers of heavy volume, which means you actually have high conviction, but you have high conviction on both sides. And so when I turn to the institutions to ask this question, it turns out that yes, they are divided. You have division among institutional buying and selling, and that is the majority of the liquidity in the market, right? So then becomes how strong is each side's, you know, gut feeling on this, or whatever the hell you want to call it, because obviously one side's wrong. And bears are pointing to an overvaluation on stocks right now near the all-time high, that the previous earnings don't justify the prices. You have instability on the world stage. You have the fear still of recession, and you have upcoming election plus earnings season, right? So they have all this, and to them that says, okay, uncertainty equals caution. They're sellers. Then on the other side, you have people who are saying, look, the economy's good. The Fed threaded the needle, right? Employment looks good. Uh, Inflation has come down. Uh, we have, while there is global uncertainty, uh, the US is not involved directly. in any of the wars, and actually could stand to be the beneficiary. Earnings were good, above expectations. They weren't great, but they were good. And a lot of these prices are justifiable. And in fact, there's a balancing occurring where the market is not as top heavy as it once was. So you have these two competing arguments. Now, keep in mind, these arguments are also longer term. Some are for the quarter, some are for the full year. A lot of it leads to future buying back and forth. Eventually, one side wins. And how does that happen? How does one side win the argument? Well, they see their arguments as equally potent. So you'd have to have an event. You'd have to have an economic number. You'd have to have a news event. You'd have to have something that tilts the balance. And then it becomes a question is of how strong is the conviction of the other side. So right now, that's what you're seeing. You're seeing this balancing act. You're seeing this back and forth where you have equal enthusiasm on the bear and bullish side, and it's keeping the market right where it is. And then you can also see sector by sector a lot of this rotation. Today, tech is strong, right? And yesterday you had obviously strength in energy. Consumer defensive was strong a while back. So you're getting a lot, it's not concentrated. Normally these things are concentrated in something like tech. And that's not the case here either. NVIDIA really hasn't gone anywhere, for example. Not that we haven't made money off of it, but it hasn't gone anywhere. So that's kind of where we are right now. I just find it odd that VIX is so low. And what can you do with a low VIX? Well, you can do a lot of SPY strangles. You can do a lot of SPY straddles. QQQ option prices are going to be lower than they perhaps should be, based on the volatility that could be ahead, right? So you could also do a call spread, a 20 $30, $20, $30 call spread, call debit spread on VIX expiring in, late October or November. Also an option. Those are things that if you say, okay, no matter which side wins, is there going to be volatility? If you think there is, then you play VIX. If you feel the bear side, then you'd play SPY. But I wouldn't do any of that. You could do VIX now if you wanted, but I wouldn't directionally do anything until you start seeing a direction. Because believe me, you're not going to miss it. If SPY falls and the bears win on this argument, it's got, like I said, a long way to go to that 50 SMA, which is what it would be testing first. And you have plenty of time to catch it. So you can wait for a drop. You can wait for a confirmation and not think, oh shit, I missed my chance to short SPY. You didn't miss your chance to short SPY. So, okay. Alrighty then. So, boring friggin' market right now. Doing jack shit. But there are some opportunities here. But first, I want to address this question from Sasha. Currently doing my monthly walkaway analysis. Glad you did it. My main issue is not giving enough breathing room to my trades. That's what the walkaway analysis is designed to show you. For those of you who don't know what the walkaway analysis is, I designed it about, 2.5 years ago, and it's posted on Reddit. It is meant to show you what would happen, what would have your P&L look like if you waited 5 more minutes before you closed your trade, an hour before you closed your trades, on average. And in the end, you'll be able to see, okay, if on average I wait another hour before closing my trades. Now, every trade's situational, but it gives you a sense of what your staying power is. Your profit would have been X more, right? And your question is would you please detail your thinking about exits today regarding discussed trades? So the question really becomes, there are two different ways to exit. I first, gaps are gifts. I tend to exit it open on profit. Do I miss some things? Yes. But for example, I exited my SPY put debit spread with a profit. on open. If I didn't do that, I would have been screwed right now. The trade would have been crushed. Um, because I had a gap down, I took the gift and I ran with it. So that's one way to do it. If you're, if you get a gap that is in your favor, take it as a gift and close it. Another way is, um, it's very tempting when you see a trade. Let's say you short, I don't know, Microsoft here, like I did early in the week, and you did 5 contracts, um, and it's up $1. All right, you made $500. Very tempting to take that profit. Now, there are times where you can take the profit because it's violated the technicals, right? And your standard for what that violation is changes based on your appetite for the trade. So you could say, well, it went above VWAP, and now you're looking at intraday. So I'm going to close the short. Or you can look at the daily chart and say, I'm not going to close the short until it, uh, crosses over resistance or something. And a lot of times that means you're closing the short at a loss. So one, it depends on where is your technical kind of boundary on the trade. But another, it's really mindset. It really is this propensity that all traders have, all traders, um, in holding losses longer than holding uh, winners. And one of the reasons for that is a little mental trick, right? That our mind plays on us, and I'm sure you'll all recognize it, which is we have a tendency to remember all of the times that we were in profit, didn't take the profit, and a trade reversed on us, right? I was up $1.50 on these contracts. I was up this much per share, and I wanted to hold. I didn't. It reversed. I got screwed. Um, that's what sticks in your head, is those reversals. What you don't remember are all the times you closed the trade, and it just kept going up or it just kept going down if you were short. So you have this bias in your mind to remember the opposite. Um, so you have to try to understand, are you closing the trade because you're afraid of something that may not be true, which is, oh, I tend to these things tend to reverse on me. Do they really tend to reverse on you, or is it only sticking in your head? I mean, is that quote from Rounders where you remember with startling clarity every bad beat you ever gotten, and that can fuck with your head. So you really have to clear your mindset. Try to enter the trade and understand where technically your exits are going to be. That, remember, the more emotion you remove from your trades, the better off you're going to be. Okay, so the next up here is someone saying that a snow short, take a look at snow here, is perhaps pretty good. So I still have snow here on a buy signal on the daily chart. If you go to the M5 here, it is on a sell signal on the M5. But what I'm really curious about is on this daily chart here, this compression. Now it looks like right now, snow is starting to fall out of that compression. What I care most about is this kind of upward trend line here. And my advice on a snow short would be, if it closes or looks like right at close, it's going to close uh, just below that trend line or below that trend line, then snow actually becomes an excellent short. If it recovers, obviously, and goes above the trend line, then I would clearly, I wouldn't short the stock if it's closing above the trend line. So it's relatively weak right now, but it's not terribly relatively weak. So I would hold off and wait to see at close or close to close, is it going to be above that trend line? Okay, let's move on. Oh, so Monty, you just posted a bunch of different things, so I'll just run through them. FTAI, FTAI. Yeah, I mean, obviously the daily chart looks good. It's a bit extended. I do not like the volume. The volume on this 430,000. I tend not to like things that have volume under a million, but this is a fairly steady stock here. It's you know, it's got a decent ATR, but if you know, there is a bit of a trend line here going up right through there where it's touching up against. It wouldn't be my pick for a long. I wouldn't fault the long here, but you know, I'd watch it very closely and just make sure it gets above one. You know, if it comes up to like 137 and it looks like it's stalling, that's because it's hitting up against a trend line, and I would avoid it. Okay, the next one on your list is Vistra. Um, Vistra. Let's see. Wow, that is I mean, this thing is just sort of breaking out here and a continued breakout here. Um, Earnings aren't into November. It is now broken through to an all-time high. Yeah, I like this one. I like, I mean, this is an all-time high for the stock. Uh, it's on a buy signal here. It's on a buy signal here across the board. Um, VST is a nice pick. I would go with that. PLTR, one of my faves. Right now, PLTR, I'd hold off only because if you look at PLTR, while it is on a buy signal on the D1 and on M5, look at this compression here. See this compression? You really need to see this stock get above, I don't know, 38.50. I would put as your alert on this stock. If it breaks that, then yeah, then you can start looking at a good long. But right now, I'd urge a little bit of caution on PLTR. And then finally, you said Pilgrim's Pride, right? Which is PPC. Um, right here. Another good stock on the daily chart, but it's now below VWAP. It's retraced. It's flat on the day. It's not relatively strong, and it doesn't have the volume either to rely on. So, out of all those that you posted, you know, I like VST and probably the best in terms of your choices. But all pretty good picks there. Not bad. Not bad at all. Okay. Moving on. Moving on. Look at MSTR today. Jeez. I mean, Bitcoin's up. Not like it's not because Bitcoin is like soaring here. I mean, it's just this thing is just crazy. Glad I got out of that short. All right. What are your thoughts on the rip in Chinese stocks right now? Temporarily new norm, something else? You know what? If you try to understand why Chinese stocks are ripping or not ripping at any given time, you're going to drive yourself crazy. Um, they're you know about as ethereal as the wind. This thing will just in Chinese stocks. One morning you'll wake up and they'll be crashing in the next morning because oh look the real estate issue or this issue. Just follow the price action on particular stocks if you have a particular one that you like. You know, for example, Baba is obviously very strong right now. It's up to 113. Um, just remember the problem with a stock like Baba, which is there are probably more bag holders in Baba than most other stocks out there. And by that, I mean, there are people who still own Baba at 230. There are people who own Baba at 300. I don't know who they'd be, but they're out there. A lot of people owning Baba at 150, 160. So when you have a stock like this that has, you know, for years crushed um, the accounts of people who just went all in on Baba, and there are a lot of people who did, and then they held. Um, you're going to get these sort of moments of heavy selling, right? Profit taking or break even taking on that stock, and they're going to be at different points. So far, it's been able to withstand it, but also it hasn't yet recovered to the point of, once it gets over 121, which is sort of that horizontal line where the real dips begin to occur. Once you get above that line, and certainly once you get above 150, that's where you can start seeing some serious selling come in. So on a stock like Baba, it's not a bad long, but just keep in mind you could wake up one morning and the stock can be down $8, right? And so it's a dangerous stock to swing. And that's the case for a lot of the Chinese stocks, which people have put a lot into over the years, and they have taken a 50, 60, 75% cut in their stock price. And when you have that number of bag holders, you're going to get these tranches of selling. Um, Dallin, you've been with RDT 2 years now. Congratulations. Resistance started doing walkaway analysis the last 2 months, and my profit factor is 80%. Win rate is 80%. Profit factor is 6. Wow, that is great. Great job, Dallin. And you've been in a lot of the chats, and so you've always had some really good picks. So good job there. Keep at it. Um, let's see here. In Market Mind Games, Denise Shull says most of the time trading is going to leave you with a sense of regret. You left too early at reverse, you held on too long, all those things can have an amount of regret. And I mean, it's true. That's the difference between trading and investing, right? If you're an investor, you're going to ride these ups and downs, but in trading, you're never going to have perfect exits, right? So you're always going to have, I should have held longer, I should have left earlier. And the way around that, the way around what she's talking about, and the only way around it, and the way around a lot of these mindset issues, and if you can get to this place, it'll do you a world of good, is to truly treat your trading like a business. You have a business plan. Let's just keep it simple. You put in, I want to make $5,000 a month, right? Whatever it is. I'm just going to use that as an arbitrary number. 5,000 a month is in profit is your goal. And you have your starting capital in there, right? Let's say it's 50,000, right? Whatever it is. Again, arbitrary. Those are your goals. Your regret or happiness should be based on meeting that goal, that monthly goal with consistency, not any individual trade, not, oh my God, I left this much on the table here or that much on the table there. It should be, did I hit my goal this month? And do not be fooled into thinking, oh, great, I had a $10,000 month. That is not good. If you are projected to make 5,000 in profit a month, right? And you should have a standard deviation off that of 1,000, which means 68% of the time you make between 4 and 6, and 95% of the time you make between 3 and 7. You do not want these wide swings, because if you have a month, if your goal is to make 5,000 a month, and you may have a month where you make 10,000, that means you will also soon have a month where you've lost 10,000. You're not showing any consistency. Consistency is how you win at this game. So you want, I made 4,900 this month, I made 5,400 the next month. You're right in that range. And then the only time where that goal gets raised is when you raise your base amount, right? So let's say 6 months in, you've now made $30,000. You're going to take 10,000 of that and put it into your base amount and now have 60, right? So now you've increased your base amount by 20%. So now you can increase your monthly goal by 20% and say, now I'm looking to make 6,000 a month and not 5,000 a month. And that is what you base it on. That is how you get around a lot of the mindset, which is if you treat it like a business, if you truly look at this, right? And in that case, there are people like, well, I've hit my daily goal. You shouldn't have daily goals, right? It's monthly goals. I'm done for the day. That would be like you run a restaurant or a store, and it's like, oh wow, we had a great afternoon rush. Let's close the restaurant for the rest of the day, or close the store for the rest of the day. We hit our profit goal. No, that's not how business works, right? You gotta take the good days. You're gonna have bad days. It should average out to your overall profit. So That is the only way to dispassionately look at your trading and your mindset. I've taken huge losses. SMCI fucking killed me, right? I lost I don't know, 3.6 million, something like that on SMCI this last quarter, right? But I made 4.8, 4.4 million in profit on other trades on last quarter. So my overall quarter, I'm up $800,000 for the quarter, even though I got crushed on SMCI. Looking at it as the overall, this is how much I made this quarter, allows me to not kick myself over SMCI. I'm human, obviously. I'm going to go, wow, if I just never traded SMCI, I would have been up 5 million last quarter. Great. Okay. But you can't do that, right? Obviously, you're going to go there occasionally, but I look at it as, did I hit my quarterly goal? Yeah, my quarter about a million. I made 800,000 within that standard deviation. It's pretty close. I hit my quarterly goal. Okay, that's it. Moving on. Now starting this quarter, new quarter, same goal. Move on. Right. Every 6 months, I increase my base amount by 15%, um, and and adjust my goals accordingly. That's it. It's a business. Simple as that. That is your goal to get there. And some people can, draw up an actual business plan, right? This is how much I'm spending on monitors, on computers. This, should you incorporate, get a LLC, maybe turn it into an S corp, and get trader status from the IRS if you're in the U.S. If you do that, you can write off a hell of a lot, and also not have to worry about wash sales. But you put together that business plan. How much are you going to spend on things like, certain things cost money, right? I mean, just to get a subscription to Trade Exchange, whatever, those go into your monthly cost or your quarterly cost. And then after all your costs are figured and the amount of capital you put in, then you look at, all right, now what does my profit need to be in order to justify this, in order for this to be a job? Otherwise, you're gambling. Otherwise, you're going in every day. Yeah, I made 1,000 today. No, I lost 2,000 today. It doesn't work. It just won't work. If there's one major piece of advice I can give people who are at the point where you've gone through the 2 years, the 3 years, however long it took you to get that win rate, get that profit factor, and get it to the point where you have passed your benchmarks, then you turn it into a business. That is the way to protect yourself from the mindset that plagues most traders. Can you talk about your position in Oxy? Yeah, of course. So, well, that position was up over $1,000 earlier. Right now, it is down a bit. Oxy, I like the fact that it broke out of compression here. I'll put it on here. Oxy, take a look. Okay, so you still have a buy signal on the daily chart. You have this kind of break up of compression here. You obviously have news that's driving this. You have high volume. I think that, and it's also one of the more sensitive stocks. I'm not too worried about this position here. Obviously, it's news driven. If all of a sudden there is, peace in the Middle East, and, hell, you don't want to root against peace in the Middle East, but you can always bank on the fact that there's not going to be peace in the Middle East. The stock's going to continue to go up. So I'm fine with the Oxy position right now. I don't want to see it drop below 52, obviously. So I'll be keeping an eye out. Thank you, Aiden, for the comment. Andre, MMM, possible bounce. Seems like a long setup. MMM, possible bounce. MMM, let's see. Why am I singing the Inspector Gadget theme song? I do not know. And why are you looking at a stock that is down today on a day that SPY is up? You're anticipating some sort of bounce. You're hoping you can now take this thing, which is on a sell signal. But look at this daily chart here, right? On a buy signal here, right? Obviously, if you bought it on the buy signal, even right here, you would be doing quite well, right? You buy it at the end of the day here, 127, 28, and now you've made $9 on the stock. Great. But right now, this stock is consolidating here It has not, you know, its all-time high is all the way up at around 187, so it has a ways to go. But this stock is very low volume today. Look at this volume here, and not really doing anything. Now you have the 15 EMA sitting at 135.39. I would keep that as your note. If it bounces off of that, then tomorrow, if it starts to look strong, that's when you might want to consider it. Only after you get a nice bounce, but not before that. Hold on 1 second. Okay. Did he take the NVIDIA trade with two SMAs meeting each other? And then that's JDT, and then Justin, where's NVIDIA at right now? So two NVIDIA comments. I was really tempted to. You know, when you see SMAs converge, take a look at NVIDIA here, right? When you see SMAs converge, right here, you see it, right? And yesterday, 2 days ago, they were really converging. They're like right there on each other. But when you see that, that actually indicates very strong support. So the SMA 50 is 115.71. The 100 is 116.60, right? So we'll call it 116 is kind of where that strong support is sitting. Why didn't I go long NVIDIA? Well, I was like literally a click away, like right there on going long NVIDIA. One, I would have been taking a NVIDIA play while it was weak, right? And yesterday it was. Two, obviously it regained strength. Two, I had just shorted the market yesterday before close. Literally had just shorted SPY, and so here I am short the market on a stock that isn't exactly relatively strong. If either of those things weren't true, if I was shorting the market but NVIDIA was relatively strong, or NVIDIA was where it was but the market was stronger, I would have taken the trade. So what I need to see here is either some real strength out of NVIDIA crossing over 120, or some real strength out of the market breaking above 570 and staying there before I consider that. I did quite well with NVIDIA last quarter. I know the stock fairly well. I want to make sure it's not going to come back down and test those SMAs again. Again, when you have crossing SMAs like that, it offers a lot of support, right? So there we go. Love these questions. Really great. Great questions. Okay. All right. There are a lot of them, though. Let's see here. Okay. DocuSign. Consolidation above an H1. By the way, sorry. Oh, shit, that's not good. I do have, I do have two IPOs that I'm doing, but give me 1 second here while I just get something to clean that up. 1 moment. Let's go back here. Sitting here with my dog, by the way. Let me just clean this here. Right now, the entire room smells like coffee. Lovely. Great. I blame DocuSign for that. Yeah, right here. Let me just get that done. Okay, here. All right, sorry, back. All right. What was it talking about? DocuSign. Right, there we go. Great. Okay. Oh, so at least some under the keyboard, isn't there? Just like that under the keyboard. There we go. Okay. Clean that out. There. Okay. Great. Sorry. I'm back. Great. All right. Okay. Blah, blah, blah. Sanctions on Iran. Biden does not support an attack on Iran's nuclear sites. Iran's president says we do not seek war, but if Israel acts against us, we will respond. Blah 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 blah. Okay, usual stuff. All right. So, sorry. Back to Dr. Sun. Here we are. Okay, so you're looking at um, a break consolidation above an H1 trend line. Yeah, I see it. But I'd be more focused on the trend line coming in at 63.24 here, which you can just kind of draw down right from right into here, right? So I'd be more focused on that trend line up there, if it's going to break or not. Obviously, the stock is above all of its SMAs. It's somewhat strong today. It's above VWAP. I don't think DocuSign's a bad long here. I would just, you have a 60.50, which is sort of the low of 60.57, the low of 926. That's where I would put my stop on any type of long for that. Okay, going through. I already talked about my thoughts on the Oxy trade. Okay, Tesla, DVAX, TW, a lot of questions. Let's go with Tesla here. Tesla reported its numbers today. Obviously, it is down for the day. Tesla, 1 second here. Hold on. One second. All right. So here we have Tesla, big drop off of those numbers that they reported, down, what is it, down $8, 860, something like that. On the technicals right now, Tesla is above its SMAs. It's above VWAP right now. I wouldn't short it. I wouldn't go long. It seems like it bounced off the EMA 15. So, as far as Tesla is concerned, I would watch the short, but I would not. Sorry, I would not. I would not touch it right now because its support is all the way down here at 223, but it does seem to be rebounding a bit. So watch that gap at 250. Where is that gap at 250.55? Obviously, if it starts going into the gap, then you're going to want to stay away from any short, certainly on the stock. And then you mentioned DVAX, and you mentioned TW, I think. TW, yeah, I'm not going to even put it up. 300,000 shares a day. I would not touch it. Again, if it's under 1 million shares a day, you're asking for trouble on these stocks. Those are very, very, even the price action looks okay on TW, I would really caution against a low volume. But let's take a look at DVAX here. And you see DVAX is going to be in a compression, a huge compression. It's on a sell signal still. But this stock here needs to break out of compression. It's got, it broke 2 SMAs, one here and then one here. And now it has its 200 SMA up here at, I think, 1198. So also you get an ATR of 34 cents. It's not enough to really do anything with this stock. And it's not that particularly strong today. I mean, it's up, but it's up 15 cents today. So again, I would stay away from it. All right, let's see. Now, workday short. Nope, you're not looking at the daily chart. What is that? That's 100 SMA. It's right there, right? It bounced off of it. So right off the bat, it tells you support's holding. It's down today, but you look at this daily chart, and now it has the 50 SMA right over here. So it's in between two SMAs. There's nothing to do with this stock at the moment. Absolutely nothing to do. Just stay away. Um, and let me see this here. What was this here? Okay. Okay. So, how's the challenge going? Going fine, really. I think it'll double by, like I said, it was the end of September, probably the end of October now. I had a couple of nice wins on it. Uh, you know, I think right now we're holding the Oxy and LUNR. Not that happy with LUNR. I still like the setup on it. I'm waiting to see if we're going to get a rebound. There's been some weakness the last 2 days, so I'm holding on to that, and I'll probably put in another trade here before close. So like I said, someone just asked, am I still bullish on it? I'm still bullish on LUNR, but I am a little worried about this gap here that exists at 744. So if you put it up on the daily chart, this is the gap here, and it's at 744. It's currently at 740. I want to see this stock close above 744 today. I want to see it stay above this gap. If it doesn't, I'd consider closing the trade for a loss. More profitable trading stocks and options. Stocks, without a doubt. Stocks are always going to be more profitable, right? It's just difficult to trade stocks if you don't have a big account, right? So, you're going to get, if for 100 shares, let's say you have $10,000, you can get 100 shares of Nvidia, and it goes up $3, you've made $300. If you have $10,000 and you get 5 call options on Nvidia for $3,500, and it goes up $3, you just made $1,500. So obviously, that's the benefit of options. However, if I own those shares in Nvidia, and if by the time the options expired, break even or down, I can hold the shares, right? And okay, now I have fundamental faith in the company, and so therefore I'm not particularly worried about the trade. And then you hold it until you get to you hit your profit number, and then you get out. The thing against you on options, the two things against you, obviously, biggest thing is the ticking clock. You don't only have to be right, you have to be right within that time frame. Number one, right off the bat, ticking clock. Number two is people have a propensity of getting options that aren't deep in the money. So because of that, you not only have to be right, you have to be right enough to overcome the premium you've paid. And if they're out of the money, you have to be right enough to not only overcome the premium, but also for the stock price to get up to or close to what your strike is in order to make up for all that premium. So, if you don't get deep in the money options, you have even more working against you. If you get deep in the money options, they cost more, so you get less of them, but you still only now you've reduced it to, okay, now I only have a ticking clock working against me. So those are that's the concern with options, right? You can have a big win with options, but options can drain you. The other problem with options, and everyone experiences this, me included, is in terms of closing them for the loss, right? Because it doesn't just happen immediately. It's like a slow boiled. It's like boiling a frog. Oh, the option's down 50 cents today, but I'm holding it. Okay, now it's down $1. And then all of a sudden you look and say, oh shit, now it's only worth 35 cents. There's no point closing it. It was originally worth $5. I might as well hold it. And then you lose that too. So options can mess with you a lot. And that's why generally trading stocks directly are always going to be more profitable, uh, consistently profitable than trading options. So, all right. Okay. What challenge is this? I put together a challenge about 7 months ago. I'm going to take a $12,500 account and double it to 25,000, which is your day trading line in the sand that you want to go over. So that is the challenge that I'm doing strictly with options and swing trading in a margin account. So you only get 3-day trades every 5 days. That revolves. That's the idea. Um, let's see here. A lot of stocks on a breakout of an all-time high, H trend line, CRM as an example. Any thought on a trade of these? You really, really, I mean, if you take a look at CRM, you really need the market. Um, so yeah, CRM looks very nice. It's a really good long here. You have this breakout of some mini consolidation over here. You have a gap fill over here. It is on a buy signal. You're above all the SMAs. And in fact, Serum is probably going to be my pick of the week for a long. And you know what? Let's just see what let's just take a long right now on CRM. So what would I do on CRM? Take a look. Let me look at next week's options, and let me go down to the 270 options are currently $11.70 ish, right there. Um, that's one way to do it. Or you can do a call debit spread. So let me look here at the 270. Let's look at the 280. 282.5 is for a dollar. You want it to be below $1.25, so that's good. The 285 is $1.77, and you want it to be below 250. So if I took that for, let's say, $1.80, I put that in for $1.80, and I asked for 10 of those. There. Let's see if I get it. Yep, there it is. Done. Okay, so I just took long CRM. Let me put it up here in my chart. Okay, so I'm going to post this right now. I like to post it within a minute of doing it. CRM, I did a CDS, a call debit spread, where I bought the 280 calls and I sold the 285 calls. I did that for a total debit of what was it, $1.80, and I did 10 contracts on it. And a CDS, unless designated otherwise, is always going to expire that same week. So I'm posting that now and posting that up to Twitter. Okay. And there we go. Post, send, done. Okay. Now we have our trade of the week in CRM. Nippon Goomer, thank you for the call out on the stock. Okay. Now, what is a healthy percent target per month? Really depends. Um, you know, come up with your annual target first, right? So let's say you want to make 50,000 a year in trading. And that comes to about what, 4,200 a month, something like that. Somewhere 4,000, let's call it 4,200 a month. And let's say you have $50,000 to do it. So now what you're really looking to do is double your account in a year, and that is a tough call. But let's say that's your goal. Now you're looking at a 10% return monthly. That's a lot. You know, start out 5%. So if you have 50,000 in the account, start out trying to do $2,500 in profit a month. 100,000 in the account, start out trying to do 5,000 in profit a month. Try that number, and if you find that you're hitting that number pretty easily, then you could raise it. So a lot of it has to do with your ability and how good your trades are, how good the market is. But start out lower, and then you can always raise it up. Don't start with I want to make 20% monthly. Start out with 5% monthly, somewhere around there, and see where you are. Maybe you have to adjust it down to 3%. Maybe you have to adjust it up to 10%. Maybe you find I can only consistently pull a 2 to 3% profit, and I don't have the total balance for that to be worth it as a career. So now you know what your goal is, right? You need to, if you know you can do 2%, you need to either go back and train more to get that 2% up, or have a larger starting balance, one of the two. to hit your goal. So, first you have to know what is your goal. What do you need for this to be an actual job that can sustain you and replace the job you have, not a hobby, but an actual job. And then what percent can you realistically do? Start out low, move it up. Why I allowed myself to take a large loss in SMCI and somehow never trader should approach risk analysis considering that. Um, and then what are your most valuable lessons you learned, your biggest gains and losses? So I guess those are kind of tied in. Um, so yeah, I mean, obviously I held on to that longer than I should. Keep in mind if it's on first a short seller attack report and the news on a 10K, the loss would have been much lower. When those things came out, it was like an instantaneous drop during that day. And then it's a matter of you don't get out during that drop because you got to see how steep the drop is, and you got to see. And I did get out on the second drop on the Justice Department report. It was just one too many things. I kept getting bullish feedback on the company on a fundamental level through the institution. I was told that they had a detailed conversation with the board of that company, and that the 10K would be fine. And so one of the reasons I was holding it was if that 10K, if that information was correct, it wasn't correct, and the 10K was released, this is one of the most highly shorted stocks in the market. You were going to see this like short squeeze of all short squeezes, right? And that would have recovered the stock. So I waited a little bit too long and put a little bit too much faith in the intelligence I was being given institutionally on that trade. So most valuable lessons from the biggest gains and losses? Yes, not to concentrate on the biggest gains and losses. To only focus on your average, your average, your average, your average. That is what matters. Understand it's going to, the best hitters, and go Mets, but the best hitters are going to have 0 for 10 streaks, and they're going to have, but in the end, what is their average, right? What is their overall average? And that is what you focus on. If you just focus on your streaks or you focus on that one great trade, obviously you're going to celebrate a great trade. I had a great trade on MU earnings. Fantastic. It was $1 million trade. Doesn't mean I'm not going to celebrate that and be happy about it, but I'm not going to focus on it because I know every quarter, odds are I'm going to have one or two of those. And every quarter, I'm going to have one or two losses, but not as great as those. So it's going to balance out. I would start getting concerned. My biggest lesson is, get concerned when your averages start to tilt, not when any one big trade goes in your way or doesn't go your way. Am I subscribed to a Bloomberg terminal? Yeah, it's right there. So yes, I have a Bloomberg terminal. I have 4 monitors in front of me, and you see behind me there, I have a Bloomberg terminal. So yes. Also, Bloomberg terminal is, and it's, to be honest, it doesn't offer that much more than Thinkorswim. I use the Bloomberg terminal because it's my way of communicating with JPM. It is biometrically confirmed, so they know they can take orders there. You can't email them orders, you can call them all the time. But this way, if I want to put an order in through JPM, I can just put it into the chat bar and the order gets executed immediately. I can go back and forth with them and talk to them directly. And it's confirmed that it's me that they're talking to. So that is really the only method that they'll use on their desk to talk to the clients like this. So let's see here. What is a reasonable yearly target percent of their account if one wants to do this full time? I kind of went over that already. I mean, in 2023, I more than doubled the account. In 2024, I believe I'm up somewhere around 74%, something like that in the account. So, by the end of the quarter, I'm hoping I'll hit that average again. But I've been doing this a while, and that will take time. So, like I said, you need to figure it out. people are like, can I start day trading a career at $5,000? No, you can't. What you're doing is buying a lot of out of the money options and hoping that they pay off. But if you save money and you put in the time in 2 years, you need to get to the point where you're confident that those stats will hold. It's really all about the stats. It's about your journaling. It's about making sure you can consistently do this. All right. Time to short MSTR. Well, you know what? No, it's not, because it is extremely bullish. You're counter trend trading there, Chrissy. And that's not, that's going to bite you. Look, obviously, right now, MSTR is pretty extended, but if you short MSTR, it could pay off. I mean, it's tempting to short the damn thing. I agree. But MSTR also has shown the ability to go up to 200 here. Before the split, it was at 2000 a while back. This thing can keep going, particularly if you get a pop in Bitcoin. If Bitcoin pops up to 65 here, MSTR is going to pop up to 180 and you're stuck. If you wanted to do a strangle or a straddle on MSTR, that might be the right play for the stock. To my knowledge, the statistics help or overcomplicated things for starting out. Definitely helped. 100% helped. Because I used to, obviously, I was a professor of statistics. I taught statistics. I did predictive modeling. Hold on a second. Both of my, okay, let me see here. My 19 FRO, sorry, not yet. One second. One of my IPOs just opened. That's FVR. Okay, there. And the other one is Sorrow is out as well. At what? 31. Okay. So Sorrow, I got in at $24 and FVR 19. So the FVR is going to be flat, and Sorrow will make around $7. I'm not going to. I don't post those because they're, IPOs. Okay. So I was saying, yes, what it gives me faith in is understanding statistics gives you a certain comfort in them. If you know what your win rate is, you know what your profit factor is, you're going to have comfort in them and you're going to rely on them. And, if you sit there like, well, statistics can be wrong and blah, blah, and all that other bullshit, which basically means I haven't read a book, then yeah, you're going to sit there second guessing yourself all the time. But if you know what your statistics mean, if you know what the averages mean, if you know that it's built on a good number of trades, if you know that you have a tight standard deviation around your monthly averages, you're not going to worry too much about any individual trade. You're going to know it will balance out in the end. I'm at a point where I'm making money, but my win rate is only 60%. I cut losses quick for a lot of trades. Like if it doesn't give relative weakness or strength, I would cut them quick before it rolls into bigger losses. So that brings my win rate down. It's not concerning. It's only concerning as to what your profit factor is, right? Now, I say you need to have a 75% win rate to check off to move on to the next level, but that doesn't mean that's what you have to keep when you're trading. That just means that you know how to, almost by muscle memory, enter into profitable trades, right? And to that 3/4 of your trades are going to work. But if, for example, you have developed a style of trading where you're taking a lot of small losses, but you're holding on to winners, and so your profit factor is 3 or 4, and your win rate's only 60, but you have this huge profit factor, then great, stick with that, right? It really depends on your thing, and taking small losses is good, but just make sure that you're not taking losses based on small 5-minute candles either. I'm going to try running through some of these quickly here. APP. Let's take a look here. All right. App looks good, but it's pretty extended here. It's got a bull flag going on the daily chart. It's on a buy signal, but it is currently in consolidation, and that consolidation is not going to break until you see a break up 133.05. So you need to set your kind of um, alert there at 133.05. It's at an all-time high at that point, and then you have a break of that consolidation and a bull flag breakout. So if you get that, then you can go long. If not, it's good as a day trade, but I would not swing it until you see that kind of break of all-time high. Time to short MU. I think that time to short it would have been a while ago. Again, first look should be to the daily chart. What's coming up? SMA right here, SMA 50 sitting at 97.20. That is offering some support. Right above it, the SMA 200, 105.97. That is offering some resistance. Chances are the stock bounces around between them. It had dropped below that over here and then came back up on this cross. And then it had bounced back down off the 100, fell below the 200, and now does not look like it's testing the 50. So I would not say it is time to. Plus, $100 as a price point is also a pretty good level of support, just as a flat price point of $100, psychologically. So would I say the inverse is true and converge SMAs and resistance? Absolutely. If SMAs converge, they offer strong support. They also offer very strong resistance. What ATR do I recommend? $1.50. It all depends on the stock and the number of shares or contracts you're doing. If you have a $100 stock that has an ATR of 30 cents, you're not going to probably want to trade it, right? It's not going to go anywhere. This thing stays in a really tight range. But if it's a $5 stock that is ATR 30, a $10 stock ATR 30 cents, right? That's the same as a $100 stock with an ATR $3. So okay, that's a 3% average move. That's a lot of volatility. Just average it out. What is the average percent move here for the stock, and how much is the stock going to cost? So there's no set dollar amount. It's more of a kind of a percentage amount. Some healthcare stocks with great price action here. You said BMY. Let's see here, BMY. Yeah, BMY looks good. It's a little extended, but the thing is on a buy signal since way back here in July, and it has not gotten off that buy signal. But it is right now overall SMAs as a way to go. It broke out of compression. BMY is a good long, and then you have ILMN here, and ILMN here. Let's take a look. Also looks pretty good, but this one here has 137.18, which is this high over here, 137.18, and you need to see it break above 137.18. So I would set an alert on that. Yes, I covered Baba eggs already. How do I get info on which IPOs? Did it say, hey, do you want to go into this IPO? Do you want to go on that IPO? Okay, great. Done. And that's it. They just tell me what's available, how many shares they can get me. Sometimes there's not many shares. Sometimes it's a lot of shares. Like I think I only got like 1,400 shares out of Saro today, right? So I made $7 on it. So it's like, okay, 8,000. I didn't do anything. It was like $8,000. Great. How's the Wiki 2.0 going? I'm writing it a little slower than I thought I would, but I'm writing it. You'll get it. I'm working on now. The next article is going to be SMA bounces off of support. And look at CRM go right now. That's turning out to be a very nice trade. And the CDS is always this week unless I point it out otherwise. What is my biggest drawdown? Probably was on maybe Moderna. It was like a $3.3 million drawdown, or SMCI, $3.6 million drawdown. Those would be my two longest, biggest drawdowns. SPY, please. I told you about SPY. It's just this thing isn't going to move until you start seeing maybe the non-farms job report on Friday, or you get some international news, coming out of the Middle East that is going to uh, move the market one way or the other. But buyers and sellers are, with decent volume, facing off because of an economy within the institutions of buyers and sellers, both having right now equally strong conviction in their bullish and bearish theses. Um, do I see ELF as a short? ELF, ELF, ELF. Let me see. Do I see ELF as a short? Okay. Elfie, 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 Elfie. Yes, I do. I do see ELF as a short. Look at this break below compression here on daily chart. Um, this thing is a really good short, actually. I like this short, and uh, not Ferdeus uh, is a good short. It's a nice call, and that is one to keep on the radar. So I like ELF as a short, nicely going there. Thoughts on a Microsoft bullish put spread before earnings? Never do a bullish put spread before earnings, over earnings. So, a bullish put spread, you need to have, first, this stock is way too bearish. You need, if this stock was above the SMA 100 and you had support at 418 and 416, you could consider doing a 415, 410 bullish put spread. That would have to be a month out, but you can't do it over earnings. One of the reasons is that for a bullish put spread to work, you need your short put to decay, and it's not going to decay as long as IV stays high with earnings coming up. So no, you would definitely not do a bullish put spread on Microsoft. Almost done with these questions. CLF. Can I take a look at CLF? CLF, CLF, CLF. CLF, CLF, CLF. Cleveland Cliffs. Okay, been grinding since the U.S. Steel fiasco. I wouldn't call it a fiasco, but okay. It is bouncing off the SMA 50. It's below. I mean, I wouldn't go long right now on this, but as long as it stays above the SMA 50, it's not a bad long. It's not going to really blow the doors off or anything. This fucking stock hardly moves. But I mean, if you have patience and you stick with it, yeah, it technically it's not a bad long here. So great. Not exciting, but not a bad long. Even the trading shares can be easier because you can hold if they go against you. Shouldn't you consider exiting if the position goes against you, just like you would options? If I exited Moderna, I would have taken a $3 million loss instead I took a $1 million gain. If I exited Melly, I would have taken a $750,000 loss instead I took a $900,000 gain. If I exited Nvidia earlier on, I would have taken like a $500,000 loss instead of I took a $1.1 million gain. When I'm holding, I make the trade, right? And this is going to be another Wiki 2.0. I make the trade based on the technicals, but if I'm underwater on it, I then turn to the fundamentals of the stock. And I turn to, if I look at NVIDIA or Melly, for example, I turn to, okay, what is my risk here of this stock falling further? Or what is the risk of it being over, where the fundamentals are so strong that this thing is going to have a 80% chance of bouncing back up. So it really then combines the fundamental and technical aspects of trading. SMCI threw the monkey wrench in that when you had things like a short seller attack, a failed 10K accounting errors, and then a DOJ investigation, all three on top of one another. Technically the stock just entered the NASDAQ 100. It is splitting. It was strong on all those bases. The stock was a bullish stock to take. But the news against the stock changed the fundamentals of the stock, and therefore I closed it. Right, I closed it at 440. Coin, I mean, look, when you're looking at a stock like Coin, same thing with MSTR, this thing is Bitcoin related. It Coin, MSTR do not follow technicals as much as other stocks will. Coin still is bearish on the daily chart, which you can see here. And it is rebounding today, not as much as MSTR is, but it is rebounding a bit. I would not say that this stock is good for a long or short at the moment. Only a couple more. Thoughts on UNG? God, this is the epitome of what you do not want to trade, right? Why? Again, always look at the daily chart first. Where is UNG? It's stuck between two SMAs. If you just have these three SMAs on and follow them, you're going to be 10 times better off than you are right now. Stuck between these two. And if it breaks upward, great, it's a long. If it breaks downward below it, great, it's a short, particularly if it goes into this gap here at 1553 and drops below it. Right now, it is in no man's land, and you do not touch things in no man's land when they're between two SMAs. With the whole port strike, is UPS along? No. No, it is not. You know why not? Because to think, okay, the port strike is happening, even though you wouldn't know it, but let's just say it's happening. Okay, it's happening. UPS is going to benefit from that. Do you not think that at these institutions that have a huge, huge industrials section devoted to it, hundreds, thousands of employees, no one there thought, you know what, maybe UPS will benefit from this, because and then explored that, right? Because if they did, and you were right, they have far more resources to explore that thesis than you or me or anyone else does. And if it turned out they believe that, you'd start seeing accumulation here on institutions. That's why we follow institutions. I am not seeing institutions respond to UPS in a positive way from this strike. I'm seeing selling. I'm seeing it drop below the 100 SMA, and I'm seeing it drop today. So, you have to think, if I was right on this thesis that I came up with, would not have institutions thought of it? Would not, if I were right, they'd confirm that I was right? And if they agreed on that, wouldn't that they be buying the stock the way I want to buy the stock right now? But they're not. So wait for them to do it. I usually keep the 50, 100, and 200, which is what institutions primarily use. Not what they only use, but what they primarily use. If you stick with those, then you'll be fine. Okay. Home Depot's along. If it breaks 410. Let's see. Where's Home Depot along? Welcome to Home Depot. Welcome to Hammer Barn. Anyone who watches Bluey out there will get that reference. The stock has been skyrocketing up, but it's actually not that extended. 410.56. Put your alert at 410.56. Then it breaks this high of the day yesterday, and then you can start looking at this along, and maybe something you would do a call debit spread or something like that on. But okay. Thank you, Farades. In your wiki articles, you mentioned you had a couple of years where you lost money and you became successful. Can you talk about the transition process? What are some main factors that helped you? How long did it take? Yeah, I talked about this before, and it's a mental thing. So yes, I lost like what, $200,000 because I started out arrogant as hell. Me arrogant? Can you imagine? Funny. Then I can do this. Just buying, selling, what's going up, going down, no problem. Bam, lost. I'll put more money in. Bam, lost again. Woof. I'm like, all right, I can either walk away here and realize this thing has gotten the better of me, or I can go back in. And I was ready, like, more money in, let's do this. But then I realized I'm just going to repeat the exact same shit I just did that caused me to lose, right? It wasn't bad luck. It was me. I screwed up. I could not do it. I had enough trades there to show that if it was a luck thing, it should have balanced out, but it did not. Again, statistics, right? So I said to myself, all right, I am not going to make another trade until I learn all I can. So of course I read the books, right? And then I went into all the various trading services. I finally settled on the one option trading service, which is, and I've been there since. And I've been a member. I don't own it. I'm not an officer of that company or anything. It's just what I settled on because it was the only one that was real. Um, but I then decided, okay, I'm going to do paper money, and I'm going to do only longs, stock. Now I'm going to do paper money. I'm going to do only long call options. Then I'm going to do only, or I'm going to try to do well only shorting, only doing puts. Then I'm going to try to do it only doing spreads. Then I'm going to try doing more complicated spreads. And I did not do a single trade unless I absolutely understood it, even though it's paper money. If I didn't understand what a butterfly was inside and out, what the theory was, I'm going to try every single indicator out there, every single Elliott wave, all the theories, what actually works, doesn't work. So I spent all this time training myself as if that was my job, as if I was in law school, right? It was more, I was in graduate school, right? And this is more difficult than that because I spent all of my time and I did not stop until I realized, okay, I can now on a paper trade account, if I went only, I can do this. If I did this, I can do this. I knew it because I could repeat it and do it over and over and over again. If you ask me any question about any type of theory, economic theory, any of that, I knew the answer to it. I began to understand how news moves markets, which works, which doesn't work. And even then, I was still miles away from where I am now, right? That is when I redeposited money. And at that point, I redeposited like 50,000, right? Or something. That is where I grew my account from. And I have not looked back since. But I did not continue until I was sure I had mastered it, at least in theory, before I started putting it in practice again. That is how I did uh, that transition. Okay, run through quick now. So we're over time. MDB, is MDB a short? MDB a short. Is it a short? Yes, it's a short. It broke below the 50. It looks good. I would short MDB here. In fact, I might actually short MDB here. Thank you very much from 01 Joj, whatever your damn name is, but it's a good trade idea. So how would I short MDB? I would go to MDB here if you're going to use options, and I would do a let's see here, 255, 250. If I can get that for under $2.50, might do that one. Or you just do that. Big ass spreads there on that one. And if I did like, let's say 5 of those, right? Let's see if I can get it for 215. Let's see. Can I get it? Ah, I got it. Good. Okay, great. So I just shorted MDB. I did a put debit spread where I bought the 250 puts. I sold the 245 puts. Oh, sorry, I bought the 255 puts and I sold the 250 puts for $2.15, and I did 5 contracts of that. And then again, that's going to expire end of the week, as any debit spread will expire unless noted otherwise. But MDB is a short, so thank you very much for that. Excellent choice. You see how it broke down below everything. It basically has met all the criteria that you want to see for a good short. Okay, there we go. So MDB short and CRM long are the two trades. Is PDD overextended right now? No, it's not overextended, and it's a fine long if you want to take it. How do you decide you want to build a position versus taking the full position? You guys might have known I've averaged up quite a bit this last quarter. If I take a position in NVIDIA and it just continues to go up, I'm going to continue to add to it. Depends on the stock though, right? If it's in news like Oxy, I'm not going to add to Oxy if it goes up. Why? It's too news based. If I have something like NVIDIA and it's very technically based and the technicals are still intact, I'm more likely to add to a winner. but obviously averaging up much better than averaging down. Uh, let's see here. Okay, there's a lot here. Hold on. 1 second. Uh, 1 moment. Sorry about that. Okay. So, next question. Where is it? Where are you? Oh, SPX gamma levels. Do we take that into account? Not really. I'm not saying you shouldn't. I'm just saying I don't, because you can divine that just straight from the price action and the volatility on the ETF, right? So obviously, you could, you know, the short gamma if you think SPY is just going to stay in this type of range. But at the moment, I'm more, you can be long gamma here, but you could also take into account how much of that is going to cause a kind of avalanche effect. But I've found in the end, it really isn't that additive to my analysis of where the market is going to go or not go. It might help explain some intraday big candles, but other than that, I'm not saying it's terrible. I'm just saying I don't particularly use it. You recently a $250 million QQQ trade, 235,000 contracts for the March 21st to 2025 441 puts that came through. Ongoing debate whether it's a hedge or confident directional trade. And it's relatively short term. Wouldn't this seem more like a directional trade versus a hedge? Would like to hear your experience on this. That sounds like a hedge to me. No institution taking that type of directional pure trade straight out the bat while holding a number of longer positions. That is clearly some institution is hedging a large tech portfolio without, and I've seen them use out of the money on this, with out of the money SPY puts. I'm sorry, QQQ puts. So I would not look at that as anything other than a fairly large hedge against what's probably a $5 billion. If you have a $5 billion long tech position and you've spent 250 million on a QQQ puts, you're spending 5% on a hedge. When you look at it that way, it's not really that much, right? So. Uh, Still holding CTNT. I never had CTNT. Maybe that was Pete you're thinking of. Um, do not short, Baba. Again, you're trying to counter. It's we talk about some of the biggest mistakes that traders make. Counter trend trading is the biggest mistake traders make. You're trying to time a top. You're trying to time a bottom. It doesn't work. It hasn't worked. It won't work. You try to short BABA now, yeah, maybe 30% of the time you're going to get a nice return. Most of the time you're going to get wiped out. And the problem with it is because of your thesis, the more you're wrong, the more you become certain of your thesis. You're certain BABA is going to reverse because it's so high right, it's going up, it's been going up. So if BABA continues to go up, you're going to become even more. Now it's definitely due. Well, if it wasn't going to get dropped before, it's certainly going to drop now. Look at it. It went up another $2. Oh, now it keeps. Oh, now this thing is going to just completely bottom out. And that's the problem when you do counter trend trading is the more it goes against you, the more you mentally become convinced that you're going to be right, just not yet. So you continue pushing that trade. You roll the trade, you add to the trade, you average down on the trade because you just know at some point this thing's going to drop. And then you get so upset when the trade's finally done and then it does drop. You go, oh, I should have stayed in it, right? And you only remember that moment, like you only remember those bad beats, but you don't remember all the time that it just kept going and going and going, right? Every time you want to counter trend trade, take a look at the NVIDIA chart and just zoom on out and remember that at any point someone somewhere thought here, 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 here. This is a good time to short. This is a good time to short it. Good time to short. Oh, short, 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 short. No. So these things can continue going up. Oversold, overbought is one of the biggest fallacies of the market because things can be oversold and overbought for a hell of a long time. So do not counter trend trade. Follow the institutions. Do not try to anticipate the institutions. Follow the institutions. Um, I look for CDS, PDS for straight calls and puts, particularly when I like to have deep in the money calls or puts for it to be viable. But if I think the move, CDS, obviously you can get more contracts. And if I think, okay, CRM is going to keep moving, but it's had a huge move today. I don't think it's going to go much. I think it's going to be ranged up to like 285, somewhere around there. Or MDB, if it's going to drop, I think it'll drop down to maybe 250. The size of the move, if I don't see that much, if I see a certain $5 move left here, I'm going to go to CDS. It's much better, and you're mitigating your loss. So that finally covers all the damn questions. I wish I had more time to rant today or something, but you guys had such great questions. I wanted to make sure I got to them all, and I think I did. So with that, good luck trading, and I will see you all next week.